Joining me now with more on the economy is Wayne Best. He's a chief economist at NYSE listed payments giant Visa. Wayne, thank you so much for joining in studio.
Great to be here.
It's great to have you. And let's start big picture. What are you seeing in the economy right now?
You know, the economy continues to move forward. I mean, the soft data continues to be a bit of a challenge, although we had a nice revision yesterday in confidence. But the hard data is really continuing to show the resilience of the consumer. They're just still out spending. And so I'm less concerned as I was maybe 2 months ago in terms of the outlook for the economy overall.
Interesting. What clues do you think we might get from the Fed minutes that come out at 2 p.m. Eastern today?
Well, I think they're going to be obviously still focused very significantly on the impact of tariffs to inflation. I think what we also need to consider is that the consumer and frankly businesses know how to shop. They know how to look for a better price. So if something is tariffed and caused a higher price, they're going to look for an alternative. We've seen some of this already, and I think we'll likely see that much more continuing. The real focus of the Fed is really going to have to be on jobs. Is the job picture going to be maintained? Are we going to continue to see job growth? In our estimates, we have about 136,000 jobs being created on average every month this year. So down from 168,000 that we saw last year. So that job growth picture will be very, very critical because let's face it, as it stands now, everybody's working. And if they're able to work, then they have money to spend, save, and pay down debt.
Yeah, there are some concerns and questions, I guess, as to whether or not the U.S. economy is in a recession. And we are going to get a first revision on first quarter GDP tomorrow. That initial read did show that it contracted fractionally, some of that due to a trade imbalance, of course, amid the expectation of tariffs. What could that tell us about consumer spending?
Well, I look at the broad measure that defines whether or not we have a recession, the continued flow of spending and slowdown and systemic slowdowns that would happen. If you look at real core GDP, which looks at the spending by consumers, businesses, and say government, it was very strong in the first quarter. No sign of a recession, certainly. And second quarter coming down a little bit because we're going to have to pay back some of the spending that we did in the first quarter. So we don't have a high probability of a recession in our forecast. That resilience of the consumer continues, and really want to watch that job picture. As long as everyone's working, we're going to be fine.
Let's talk about some of the data that you're looking at, specifically in the U.S. South. What more can you tell us there?
We did a research project to look at the phenomenal growth in population and really a changing landscape that's happening in the southern part of the United States. You know, we have often studied other generational flows and impacts of millennials and boomers, et cetera. And those are things that last over 10 or 20 years. But the South has really come to life really in the last 5 years since COVID. Surprising growth, 5.6% population growth in that area. In fact, makes it the fastest growing region in the United States right now. And on the job picture, nearly 78% of all the jobs created since COVID are in the South. 78%. That's quite a shift from what we've seen previously.
What does that mean for the overall U.S. economy?
It means that there are trends of migration that are happening. You know, if we look at the people that have come into the South, that population figure, nearly 84% of those people have been international migrants that have come in. But the other part is also interesting, the domestic migration. Consumers are, you know, tired of paying taxes and want to look for a lower housing price. And the South offers that in many cases. And so we've seen that migration that is occurring, which has a lot of potential impacts, for example, for retailers and the types of things that they're going to spend their money on. And those retail type of outlets, expansion opportunities are certainly pretty prevalent.
Does the data indicate that this trend could continue?
Yeah, there's no reason that we think that it will actually slow down. I mean, taxes aren't going down anywhere anytime soon. And housing prices are still a very, very important area that people want to move into, especially as we look at starter home purchases, which is around age 33 to 34 in this country. We're having the millennials move through that and soon the next generation. So they're going to be looking for places to live. And the South offers that option and affordability that makes it easier to have, frankly, a discretionary spending or things that are nice to have anytime that the other prices of things go down, such as gasoline.
Yeah, I do want to talk about prices, Wayne, before we let you go. Of course, that inflation report, the Fed's preferred measure, does come out on Friday. We had seen inflation via the Consumer Price Index drop, quite dramatically of late in the previous month. What will that tell us about the Fed's path forward?
You know, our expectation is the year-over-year change will be about 2.2%. So on a core basis, 2.6%. So coming down quite notably. You know, with the exception maybe still a little bit of eggs, which are still high priced, and those are finally coming back to earth. That inflation picture really points to a very robust and economy and the opportunity for people to be able to continue to spend. So that inflation picture is moving in the right direction. Yes, we may see some near-term bounces in certain prices of goods because of tariffs. But as the Fed has said, those are one-time price changes, and we're not likely to look through, or they're likely to look through the changes that we would see in those tariff price increases as they continue to determine what their policy actions will be.
Wayne Best, he's a chief economist at NYSE-listed Visa. Wayne, thank you so much for joining us here in studio.
Pleasure. Thanks very much for having me.
Great to have you.